Morning guys, it's Chris from the DAXtrader.co.uk and it is Monday the 29th of April. Hope you had a nice weekend. Welcome back to the screens. The trading disclaimer applies, it's in the description below as always. Make sure you read that before you continue. Okay, so the DAX has now just broken to fresh 2019 highs after this early morning rally. It's just taken out the high from Wednesday. We've started off the week above the weekly pivot, which is down here at 309 on futures. So it'll be slightly different if you're trading on CFD. And there's opportunities to get long with the risk that there would be a minor retracement on this bullish move so far. We have a couple of moving averages actually I've posted on this chart today. They're quite light, you might not be able to see them, but I've got a 50 and a 200, which is the standard EMAs. But I've also got the 8 EMA as well, which is kind of trailing the underside of this move. And the 8 is useful because when you close below that, it generally tends to be an interesting gauge of whether a trend is broken. We're currently clearly above that and still trailing up towards the R1 on the weekly pivots. Now, I've been talking about this over the last few days, and I'll just kind of start it backwards again and just talk you through this. There's a few things going on this chart, and it's all to do with the trajectories of price action, the frequency of price action. And what I find interesting about this is that, let's just hide up a couple of things here that I don't need. There we go. What I find interesting about this is that you've been trading in what would simply be a channel if you look at it one way, but really it's the frequency of prices, the if you like, the angle or the relationship between the spikes, the peaks and the troughs. And if we just take this one as a baseline, or this one as the baseline, and take lots of different parallels from this and take those parallel lines and just line them up against price action from different places. I've just realized now that I've changed it so now I can't put those back on, but you'll notice that just taking a parallel of these lines and lining them up against different areas of the chart, you can just see how these lines are still valid all over the chart in different positions, different places, and you can kind of put them to view how the frequency of the market and price action is flowing. And there's a whole bunch of them, but unfortunately, because I've just removed a couple of studies there, it won't let me undo the deletion of all of the lines that I just had. But you can just draw that yourself. This is on a 60-minute chart. Go and have a look at how the frequency of price is working at the moment. But keeping things simple, if you just draw your basic trend lines, the blue swing markers, higher highs, higher lows, you can see here that we have broken above this previous high, which now confirms that as the trend defining level. So I'm going to bump that line up and put that there, and that now means that 12,261 is the line in the sand on futures, and yeah, currently and remains bullish above that. The most obvious thing to do really is to just draw a simple low to low upsloping trend line. That will be the barrier. Once you've broken that, there's a potential look at a trend change or a change in behavior, which is what we want to be looking for. Alright, the levels for today. The pivot on futures is 325. The point of control has actually been tagged, and you'll notice we got a reaction down here just under 340. So if you were looking at that candle thinking, oh, that's quite a rejection, wonder why that happened, then the point of control generally does tend to be an interesting spot to watch out for that. We also were trading above the value area high from Friday, which is the darker grey section, and on the right hand side, this is a 5-day composite profile. You'll notice that we were trading just below the value area high, and we've now broken above that with some force. So the expected retracement, don't know how deep that's going to dig in, but the expected retracement would perhaps provide an opportunity for getting long if you still want this to continue higher, or still believe that it's going to move higher, should I say. And the most simple idea that you can put on this, if you're a trader that doesn't just use price action, and maybe you do want to use some indicators or studies, you can go back to basics on this and just use a very, very simple crossover system on an oscillator, and you'll see how you can use that to follow the dips to buy. This is just a very basic, fast, stochastic crossover system. It's nothing special. It just looks at when the K and the D cross below the 70 line or the 80 line, whatever you want to use. And you'll see that even a simple system like that can still provide you with valid signals in a bullish trend. You'd ignore the ones early on, of course, because it wasn't bullish. But when the bias is bullish, you're looking for longs, and they would provide you the opportunities. Okay, as far as targets are concerned, 484 is the most obvious one. If this can continue and we break above the 400 level on futures, then 484 is the most obvious target for this week. It's an exposed point of control, and these points of control generally tend to be magnetic for price action. So we're looking for price to reach that at some point. And this is a chart I wanted to single out because this is a 250 tick chart. There's no special indicators or anything like that on here. It's just simple price action. But what I found interesting about this is, I'm just going to remove a couple of things. I drew, first of all, let's just remove this regression channel. I drew this line first of all, the one at the top, this down-sloping high-to-high trend line. You'll notice that it got 4 different touches on here, which generally tends to be a good indicator of a potential center line, which we can use for action and reaction tools and things like that down the line. Excuse the pun with line. You can take a parallel from that. You'll see that it's actually a channel, so this wasn't really a point of action for an action center reaction line set, which would look probably something more like this, and you'd expect for price to reach the reaction line. It actually did do in this case quite well, but that's not really strong enough action for me to use that kind of line set. And so it was interesting to see how price responded to those parallels, and it happened the same way the other side, which I'll come on to in a moment. But with this, you can also try a different tool, which is just a regression channel, just a simple regression channel. Let's just keep those lines on for the minute, and just take the regression channel from the high down to the low, and just look at how similar that regression channel line set is, and just how interesting that center line is through the middle of price action there, and how it got a reaction on both sides, especially once it was changing behavior here. And then when it broke out and held on the underside, or the top side should I say here. So that was interesting for me. And then we've got some similar sort of similar observations on this particular move here. Now that does look like some form of action up here. So it's a bit too early to say whether or not this is going to be the turning point. I'll come on to what I mean by that in a minute. But what you often find when you've got a strong center line, something that looks like this, so you've got 1, 2, 3, 4, 5, 6 different touches, or 5 different touches here. The more touches that a center line gets, well, let me start again. The more touches that a trend line gets means that it's more likely to be a stronger candidate for a center line. But when assuming that this was a center line, what you'd be doing is just pulling the trend line through the middle of it, take a parallel up to the top. You're looking for price to accelerate away from what it was previously doing. So if I just make that line parallel to this line set here, and then move it so it's in here, so you can see how it was trending in a channel, and then it's accelerated through that. So that's an anomaly, if you like, in relation to how price action was trading on Friday. So that's acceleration into a point of action for me. So if that turned around, and I've used the wrong tool there, I should probably use a zigzag line. If that turned around here and started to move to the downside and break through this line, you'd expect for price to then go down and reach the opposite and equal reaction line down here. So that's what we're looking for, but it's maybe too early to see whether this is the point of exhaustion on this move. It might well be another wave here. So it's too early to predict that right this second, but that's the idea that I'd have, and this would be the center line that I'd base things on. So I'll remove the line set, but I'll just keep this arrow here, and we'll see whether or not that turns out to be a center. Okay, as far as strategies are concerned, well, this morning we broke above the IB, which is the initial balance, and would have hit target. Very, very simple strategy. I'm not going to go into too much detail on that. If you want more information, I share that in the channels, and I share that with the members. And the strategy itself, I mean, it moved into from a kind of a bearish bias, which is actually more neutral than bearish. With this red overlay, I would be normally looking for sell signals, but for the sake that it's been clearly bullish, as you can see on this hourly chart here. Ideally, I'm not really looking for sells just at this moment. So it did flip over to the green overlay, which is the the bullish bias. But by that point, we were already above the deviation high, and yeah, I missed this move. Don't know whether I would have taken that under a normal situation anyway. So you know, not going to worry too much about that. Okay, let's just go and get the levels for today, and I think that might be us sorted for now. So we have got FDAX. We have the numbers over this side, and CFD over this side. So if you want to make a note of those, feel free. And the last thing I'm just going to share with you would be something I covered over the weekend, which is to do with the Forex side of trades, which is the other part of my trading that I share to subscribers. And we had a really good week on Forex last week, and this was 5 of the picks that I chose for the trades. In the description below, you'll see the link for the article and the video for this one. Check that out. There's some really, really good stuff in there. You don't just have to trade the DAX. You can look at other markets as well, and you're not being disloyal. There are opportunities all over the markets. Oil was a fantastic trade from last week, which we really enjoyed. Got in on a short here. Took 300 pips out of that, which was nice. So there might even be a bit more room to go on that. Had a couple of pound-yen trades that were good. They both hit target. We had Aussie New Zealand. We were looking at a few different techniques and tools there. I got out of that one on the Friday close because I didn't want to hold it, but took out some decent points. And or Aussie Yen as well, on a nice bit of Alan Andrews' work there. It's always nice to see the old pitchforks featuring in a trading decision, and that went down to hit target. So some really, really good stuff going on there. Go and check that out. You'll find the links in the description below. But that is me done for today. Hope you have a good trading day, and until tomorrow, take care.